Sources of working capital. Sources of working capital can be spontaneous term, short-term, and long-term. Spontaneous sources of working capital finance. The word spontaneous itself explains that this source of working capital is readily or easily available to the business in the normal course of business affairs. These sources include trade credit allowed by the sundry creditors, credit from employees, and other trade-related credits. Short-term sources can be further divided into internal and external sources of working capital finance. The short-term internal sources include tax provisions, dividend provisions, etc. Short-term external sources include short-term working capital financing from banks such as bank overdrafts, cash credits, trade deposits, bills discounting, short-term loans, intercorporate loans, commercial paper, etc. Long-term sources can also be divided into internal and external sources. Long-term internal sources of finance are retained profits and provision for depreciation, whereas external sources are share capital, long-term loan, and debentures. Long-term external sources of finance like share capital is a cheaper source of finance but are not commonly used for working capital finance. Internal sources of finance such as retained profits and accumulated depreciation are as good as funds available to the business without any explicit cost. These are the funds completely earned and owned by the business itself. Thank you.